Something just happened inside BlackRock's Bitcoin ETF that nobody on the internet is talking about correctly. And if you don't understand what it actually means, you are going to make the wrong move at exactly the wrong time. So stay with me. Because the headline says one thing, the chart says something else, and the on-chain data is whispering something entirely different. And I've been watching all three simultaneously, and I think I know what's really going on here. Bitcoin is sitting at roughly $73,000 to $75,000 this morning, May 28th. It opened down 2% from Wednesday's close, and as I'm recording this, it's dipped to around $73,200 intraday. That's a 40% drawdown from the all-time high of $126,200 that we hit back on October 6th, 2025. So for anyone keeping score at home, yes, we are deep into the red from the peak. The weekly range right now is roughly 73,000 to 77,600. Not a lot of room, a lot of pressure, and a lot of noise. But the noise is where most people get destroyed. So let's cut through it. Here is the event that is dominating the crypto conversation this week. On Tuesday, May 27th, a single anonymous entity executed a $1.29 billion dark pool block trade in BlackRock's iShares Bitcoin Trust, IBIT. 29 million shares, moved in one shot. Galaxy Research's head of research, Alex Thorne, flagged it on X and called it the largest IBIT dark pool trade he has ever seen. That number stopped me cold. $1.29 billion. Not spread across a week, not averaged in over a month. One trade, 10:30 in the morning Eastern Time, Tuesday. Now here's where it gets interesting, and here's where most people's analysis falls apart completely. The knee-jerk reaction from retail is somebody smart just dumped their Bitcoin exposure. Somebody with deep pockets just ran for the exit. Bears are running that narrative right now, and on the surface it sounds logical. Because simultaneously, we have now seen 7 consecutive days of net outflows from US spot Bitcoin ETFs. 7 straight days. The cumulative hit over those 7 days is approximately $1.8 billion in net redemptions. Over the past 2 weeks, that number extends to $2.26 billion withdrawn from the ETF complex. IBIT alone bled $192 million in net outflows on Tuesday, with Fidelity's FBTC contributing another $57.7 million, Grayscale GBTC adding $41.3 million in exits, and Bitwise BITB losing $28.8 million. So yes, the outflow streak is real. The largest institutional Bitcoin vehicle on Earth is hemorrhaging capital for the second longest consecutive streak on record. That part is true. But here's the part the headline writers are not telling you. According to Bloomberg ETF analyst Eric Balchunas, who watched the tape carefully on that $1.29 billion trade, Bitcoin's price didn't move. IBIT shares stayed relatively stable after the transaction. And that matters enormously because it tells you something critical. A buyer was waiting on the other side. A single entity sold over $1 billion of IBIT in one shot, and a buyer, or multiple buyers, absorbed the entire block without blinking. That gap between the gross block trade size and IBIT's net outflow of $192 million on the day tells you the counterparty on the other side held those shares, did not redeem them, did not convert them to selling pressure on Bitcoin, just absorbed them and sat down. So the question is not whether someone just sold $1 billion of IBIT. They did. The question is who bought it, and why, and what they know that you don't. I want to be straight with you, the way I always try to be. The charts dictate what I do, not emotion. And the chart right now has some genuinely uncomfortable features that you need to hear before I get to the part that keeps me from hitting the exit button myself. The 200-day simple moving average on Bitcoin has been a wall. Benjamin Cowen, and for those who don't know him, he has been one of the most methodically correct analysts through this entire cycle. He's pointing to a pattern that repeated in 2014, 2018, and 2019. Bitcoin rallied to its 200-day moving average mid-bear market, got rejected, and then made a lower low before the real bottom formed. He's not calling for zero. He's calling for a possible retest of $60,000, with the ultimate cycle bottom potentially arriving in October 2026. He explicitly rejected the argument that spot ETFs or corporate treasury demand have structurally broken the 4-year cycle. His timing data is compelling. The peak of this cycle came on day 1,162 after the prior bottom. The 2 previous cycle peaks came on day 1,059 and day 1,168. The pattern held, and if the peak held to pattern, Cowen argues, the bottom will hold to pattern too. Now here's the support structure you need to be watching. The primary support zone sits between $73,000 and $75,000. That's where the 50-day exponential moving average lies, and it's a confluence of Fibonacci retracement levels from the previous major rally. We tested that zone this morning. The market is sitting on it right now. Secondary support is around 70,000, the psychological level that institutions have been flagging for months. If that breaks, the next meaningful technical safety net is approximately 65,000, which aligns with the 200-day moving average vicinity. And the 200-week moving average, the one that is called every cycle bottom in Bitcoin's history without a single miss, is now estimated to be rising toward approximately 65 to 70,000 by mid-2026, depending on price action. Every single time Bitcoin has touched or approached the 200-week moving average, it has been a generational buying opportunity. Every single time. That data set is small, 4 instances, but it is perfect. On resistance, you're looking at 77,000 to 78,000 on the upside as the first hurdle to reclaim. Then 80,000, the psychological battleground. And the 200-day SMA, estimated around 82,300, is the ceiling that Cowen says this market has failed to hold above. A confirmed daily close above 82,300 would materially change my view on timing. Now let's talk about what the on-chain data is actually saying, because this is where the story gets more nuanced than any headline is going to capture. Exchange reserves hit a 7-year low earlier this cycle. 2.21 million Bitcoin sitting on centralized exchanges. That is 5.88% of the total circulating supply, the smallest share of Bitcoin available for immediate sale since December 2017, right before that cycle's euphoric peak. Think about what that means structurally. There is less Bitcoin sitting on exchanges available to be sold right now than at almost any point in the last decade. Meanwhile, during the worst of the fear, and we had 60 consecutive days of the fear and greed index below 25, which was a record that broke the Terra/Luna streak and the FTX aftermath, during all of that fear, wallets holding over 1,000 Bitcoin quietly accumulated 270,000 Bitcoin in a single 30-day window. That was the largest monthly whale accumulation since 2013. The number of whale wallets, addresses holding over 1,000 Bitcoin, was counted at approximately 2,140, up 58 since December 2025. These are not retail traders. These are entities that move with conviction and with capital, and they were buying while headlines were screaming collapse. Now here's the tension I want you to sit with. The MVRVZ score, which compares Bitcoin's market cap to its realized cap, normalized by standard deviation to identify periods of extreme over- or undervaluation, was sitting at 1.2 during the deepest fear phase of this cycle. Historically, readings around 1.0 to 1.5 have corresponded to significant accumulation zones and long-term buying opportunities. They don't guarantee an immediate bounce. They don't stop the price from going lower, but they tell you where the structural value floor sits in this asset relative to what everyone collectively paid for their coins. The STH-SOPR, short-term holder spend output profit ratio, was sitting in the 0.92 to 0.96 range during capitulation. That means short-term holders were selling at a loss. That is the fingerprint of genuine fear-driven capitulation, not orderly distribution. The fear and greed index right now is registering in the fear zone, hovering around 30 to 40 depending on the day, which is actually a meaningful improvement from the extreme fear readings we logged in February and March. But fear is still fear. And fear is historically when accumulation happens quietly, before the crowd notices. I want to give you the honest bull case and the honest bear case here, because anyone who gives you only one side is either trying to sell you something or hasn't been doing this long enough to have been wrong publicly. The bear case is this. Cowen is right. The cycle holds to pattern. Bitcoin makes a lower low sometime between now and October, potentially testing 60,000 or even mid-50s, and the 200-day moving average at 82,000 serves as resistance every time we rally. In this scenario, the ETF outflow streak is not just a rotation. It's the beginning of institutional disengagement. The S&P 500 is at a new all-time high while Bitcoin can't find a tailwind, and the macro environment, with rates still elevated and inflation stubborn, keeps risk appetite suppressed. The dark pool trade was a large holder exiting period. The bull case is this. The dark pool trade's absorbed counterparty represents exactly the kind of long-term conviction buyer who does not show up in the net outflow number, which means a massive position just transferred from a weaker hand to a stronger one. Exchange reserves at a 7-year low mean the supply shock is still structural. Every time the ETF outflow streak has hit this length historically, the previous 2 8-day streaks, one in late 2024 and one in early 2025, the streaks ended and were followed by renewed institutional inflows. Not because of sentiment reversing, but because the price reached a level where large buyers came back. And the on-chain fingerprint of a bottom, whale accumulation, low MVRVZ score, STH-SOPR and capitulation range, exchange reserves near decade lows, is more complete than it was at any previous false bottom in this cycle. Here is where I personally stand on this, and I tell you this because you deserve transparency. I hold a core position. I am not fully out. I am not adding aggressively at this moment. My re-entry triggers for adding size are specific. ETF flows need to turn positive for at least 2 consecutive days. Bitcoin needs to reclaim 77,000 on a confirmed daily close, not an intraday wick, and the RSI on the daily needs to show a clear upward curl from oversold territory. Until those 3 things align, I am watching. The charts dictate what I do, not emotion. I have been in this long enough to know that the times I ignored those triggers and bought on feeling alone were some of my worst entries. The times I waited for confirmation and bought at what felt like too late were often my best ones. Let me also bring this back to the institutional picture more broadly, because the story of this cycle is really a story of 2 markets operating simultaneously. Strategy, formerly known as MicroStrategy, saw its Bitcoin holdings drop by over $690 million in value this week as Bitcoin fell below 75,000. They own more Bitcoin than any other public company on earth. Their mark-to-market pain is real, but they haven't sold, not a coin. DDC Enterprise, the company best known for selling Asian food products, just bought another 131 Bitcoin this week, bringing their total to 2,714 BTC. A food company? This is what adoption actually looks like in practice. It's not clean, it's not linear, and it doesn't show up on CNBC in a way that makes it feel momentous. But 2,000 plus Bitcoin sitting on a food company's balance sheet is a fact, and that fact exists because of everything that has been built around this asset over the past 2 years. Meanwhile, spot Bitcoin ETFs have accumulated a net 4,500 Bitcoin since the start of 2026, even with this outflow streak. And by the end of April, cumulative inflows since the ETF's January 2024 launch had pushed past $57 billion. The total assets under management across the 11 ETFs were sitting around $98.87 billion at last count, representing about 6.49% of Bitcoin's market cap. The ETFs are not going away. The infrastructure around this asset is not going away. The question is purely one of timing, which is the hardest question in markets. And I want to say something about timing that most people in this space won't say out loud. Nobody, including me, including Cowen, including the quants at Galaxy Research with their models and their dark pool data, nobody knows with certainty whether the low is already in or whether it's still 3 to 5 months away. Anyone who tells you they know is selling certainty to make you feel comfortable enough to act. What I can tell you is what the evidence suggests, what the probabilities look like based on history, and where the data diverges from the narrative in ways that matter. The data diverges from the narrative most clearly in this specific moment on this specific dark pool trade. The narrative says institutional money is running. The data says institutional money may be changing hands, from one pocket to a deeper one. That is not the same thing. And that distinction could be the difference between folding a hand that was worth holding and holding one that was worth folding. The people who follow this channel closely already know that my bias is to wait for confirmation, give up a little at the bottom, and avoid catching falling knives on instinct alone. That approach has cost me some of the absolute bottom. I've never claimed to nail the exact low, but it has also kept me from deploying capital into what turned out to be a lower low when it looked like the bottom was in. If you've been watching here, you've seen these calls play out in real time. You've seen the setups before they became obvious. So here's my practical read on where we are. Bitcoin is at a decision point. The 73 to 75,000 range is where this market either stabilizes and begins building a base, or it gives way and tests 70,000 and below. A daily close below 73,000 with volume would be meaningful. A daily close back above 77,000 with the RSI turning up would be the first signal I watch for to begin adding. Neither has happened as I'm recording this. The cycle is not over. It never ends cleanly, and it never ends when the maximum number of people expect it to. The on-chain accumulation by wallets holding over 1,000 Bitcoin, the exchange reserves at their lowest point in nearly a decade, the structural absorption of that $1.29 billion IBIT block by an unknown counterparty with apparent conviction, none of that guarantees a rally next week. But it builds the structural foundation that major rallies eventually launch from. These things take time. The market's job is to frustrate you until you give up and then to reward you for having stayed. My honest view, we are either very close to the cycle low, within 10 to 20% of it, or we have a few more months of range-bound pain ahead. The October timeline that Cowen models is worth taking seriously. It is not a certainty, but it is well-reasoned and historically grounded. And if he's right, the people who understand what a $73,000 Bitcoin with declining exchange reserves and record whale accumulation looks like, structurally, on-chain, will have been buying quietly while the headlines were still screaming. That is the setup. Watch your levels. Watch the ETF flow data. If we get 2 consecutive positive days, that is the first trigger. Watch the daily RSI. Watch the daily close relative to 77,000. And don't let a single dark pool trade, no matter how large, convince you that the story is simpler than it actually is. The biggest trades in this market are almost never what they look like from the outside. If this kind of granular data-first analysis is what you come here for, the kind where we don't hype the upside and we don't catastrophize the downside, just read the actual data and follow where it leads, you already know where to find it. The people who've been here for a while have seen these inflection points come and go. They stay because the analysis holds up over time, not because it felt good in the moment. I'll be back when the data moves. Stay sharp out there.